That's it. I've said it. Jason's passing this week. His challenge. I've said it. Jivan's
That's
doing
the
the.
energy.
That's it. That's it. Yeah. No problems. All right. So as you can see here, this is the bigger Russian dough. So ultimately, I would love to be in here for the sell, but the bigger Russian dough doesn't necessarily assist me that much as a day trader. Because as a day trader, if I want to get in and out of the markets, I've got to read and react to what's happening in the markets today. Okay. So therefore, liquidity becomes my biggest friend. Where is the liquidity and how can I trade using liquidity, being able to get in and out of the markets? And we can see on the daily, the markets may be making higher highs, higher lows, higher highs. On a daily time frame, structurally, there's nothing telling us right now that this market's going to actually, that bigger energy that I'm saying that I want it to do. There's nothing saying the market's going to do that. The market's actually saying that it wants to go up, making high. So therefore, we could possibly be in a discount of this orange range. The only problem is that the bigger Russian dough, the bigger wall, means that we're not. The bigger Russian doesn't mean that even if we are, and we see a little reaction here, I'm the bigger, badder Russian doll, this white line. But in this orange range, we're actually in a discount of this orange impulse coming up. And we might see another reaction back up into here just to muck about as this market likes to do. Then we might see it deciding, okay, we're going to break outside the orange range. But we haven't broken outside of it yet. Let's go to our 4-hour time frame. 4-hour time frame, we can see the market breaking structure. Here was structure on a 4-hour, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So on a 4-hour range, we're in the top of that yellow premium. And this is the gamble that I'm playing now. The gamble is that I would prefer to see this market from this yellow range break outside of that orange larger Russian doll here, that orange tunnel, and start coming down here. That's where we're playing in now. That's the question mark that we're playing in right now. So I would like to be in here for the sell from here because that's my overall bias. But I am very aware that of this orange range, we are in a discount of that orange range, and therefore from here we indicated from here. Look, we indicate this is one big indication on a 1-hour time frame. We came and we corrected all the way back down into these levels. We didn't stop at a previous battleground. We actually came and pushed all the way down here and nearly took the liquidity. So we're in, that is the question mark over here. Like, are we trying to take this liquidity with these two relative equal lows, this energy over here, or are we going to, we're at the bottom of this orange Russian doll and we're going to start pushing all the way up bullishly? That is the argument. Now I'm currently in for a little buy in GU just as a jab, all right, just in case. All right, but ultimately, in my opinion, especially right now, we've just came and we've grabbed some liquidity from above Asian session highs. On a smaller picture, we may see some sort of bearish reaction that we be able to pocket some monies from. And that's the aim of the game. The aim of the game isn't to be like we are some sort of guru. We know what the market's doing for the next 8 months, but we've never taken a trade. We haven't made any money. The aim of the game is, like, can we get in and out of the markets and we actually make some money? Okay, so we saw this market come and push up here on a 1-minute time frame, grab liquidity. But for me, we have to have some sort of rules. And those rules are, I didn't see it make a manipulation a breaker structure. I mean, maybe on a smaller time frame, let's have a look on a 30-second time frame. That's me reaching. All right. So though we are seeing this market coming down here, let me make you aware that it hasn't broken structure. The structure is here. Yeah, the previous battleground is here. All right, that market coming down here at the moment, doesn't really mean that much. The market is trading within this white line and this white line. All right, we could still come up here and make a lovely manipulation M like this. And then that would be giving me, I see that big displacement, because it's not just the M, it's I want to see that big displacement, a nice big red candle that breaks that middle structure in here. And then when I see that, I'll be like, yeah, bingo. I'm going to wait for the price to return. I'm in. If I want to be safe, I place my stop above here. And I'm like, yeah, we're ready to go now. Is that going to happen now? I don't know. Is that going to happen in New York session? I don't know. But I'm just letting you know. That's what I'm looking for. That's why right now, even though we've had this reaction bearish, which is going against my little position, meaning my little 400 quid is going backwards. Yeah, that's cool because I understand this market's allowed to come all the way down here. If it starts to break this structure here, then that's something else. I'll be like, okay, maybe it didn't want to, it's crap, the liquidity is cool. They want to make no manipulation. All right. And if that's the case, it is what it is. But remember what I said to you. I said to you, here there was liquidity which has been taken. It's this dashed red line. It's been taken. But there also was this little liquidity above here that I'm like, why not just take it? Why not take that as well? You're all the way up here. Why might as well just take that as well, bro? Like, man owe you money. He lives on the other road. Go and knock his door as well. Go and take his money. So it's very, very possible that we see this GU come back. This is what I'd like to see. This would be my entry. Or if I miss that entry, I'd wait for the continuation. And this would be my entry. And hopefully this market goes to hell. Why is it going to hell in this direction? Why? Because because down here, when it was falling, it did not take this liquidity, which is, in my opinion, a more key area of liquidity below here. Yeah? And that's what I'd be trading. If I got in here and everything was going good, this would be my target. And if I get a good entry, that would be my 1 to 10, 1 to 15, 1 to 20. And I'll be saying to you guys, look, dan da da da. Yeah, that's what I'll be saying. Yeah. So understand what we look for. This is what I'm saying to you. It is not a problem if the only thing you do is you trade that thing of what you look for. So that means you might wake up in the morning and be like, that's why this morning I was like, certain people got into a market. I was like, look, you got in, you got away with it. But I couldn't really see it. There's not a problem with that because it means that you're not taking every single trade. You're not fishing. You're not thinking to yourself, you're just pulling out old boots out of the lake. You're pulling out cans saying you thought it was a fish. You're pulling out, I don't know, slugs and worms. No, you want to feel that carp, that salmon, yeah, that freshwater English salmon tug on your line. And when you pull it out and say, yep, that's the energy I'm going to do. I'm going to pull now. You know, when you yank that thing out of the water, that thing's got to be a fish. Yeah. Whereas when you're like kind of just out here, you just, every time you feel a little nudge on the line, you're just ripping it out. You know, when you whip it out, you've got to start again, reel it back in. If you know anything about fishing, not to say I'm an avid fisher, but you got to reel it back in. You got to sort out your bait again, this, that, and the other, to throw it back into the water. Like, you don't want to do all that. You want to be sure. So that's why you have to trade what you look for. You see, look, for example, right here, this is a prime example. It hasn't broken the structure yet, so I'm not going to count my chickens. But when this is coming down here, because I understand trading and I'm not getting excited. I told you, I'm in a bullish position. I could have been like, oh my gosh, it's coming down here. Let me close up my position. But I can understand that here is structure. Between this white line and this white line is structure. So this market's allowed to come down here. It's allowed to come down here and sit on some previous, battlefield, some previous energy. It's allowed to come down here. So I can't get too excited like I just want to stop myself out of position. But furthermore, I want it to come all the way back up here and make my manipulation end before getting in. This is calm trading. This is professional. This is, collective trading. Yeah, I'm looking for what I look for. If I don't see it, then cool. I don't take a trade. Maybe I miss out on a trade. Maybe I don't see it and it drops for 1,000 pips. What are you supposed to say? Oh man, I should have gotten in. Why should you have gotten in? The traffic light was green. Like the cars were still running. It didn't go. The little green man didn't flash for you to walk. So yeah, your mate made it. He nearly got hit by a Lamborghini. A truck barely grazed his face, and he managed to get to the other side. Well, do you want to follow him? I don't want to follow him. It was by the grace of the Lord himself that he was able to get across the road, the dual carriageway motorway in Germany, Autobahn, when man are doing 150, that he managed to run across there. It's by the grace of God he got across. You can't follow him. You didn't see what you was looking for. You was looking for the traffic lights to go red. You was looking for the little flashing, walk sign on the Pelican crossing to start flashing. And you'd wait to hear that beeping noise, beep, 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 to let you know you could go across the road. And even then, you scurried across the road as quickly as possible. Yeah, you have to see what you are looking for. And if you do not see it, don't take the trade. Who cares if another guy on Instagram said, yes, I took this trade and this is how I got in. Good for you, bro. Maybe you're good at running across the dual carriageway, the Autobahn. But I just don't want to do that. I ain't got the knees for it. Yeah, so that's what it is. And like I said, I have heard a term that someone says that lets you trade. Like we've heard it multiple times. Sorry, like, you know, the less you trade, the more you're more discerning with the trades that you take, the more profitable you'll be. Because right now, somebody here said, "Oh, look, it's coming down here. It's taking the liquidity. It's coming down here," and they hit sell. But look at the market now. Look, Jay said, "Wait till it takes liquidity. It's taking liquidity. I hit sell." But look at the market now. You got stopped up. Why? Because it's not just the fact of it taking the liquidity that means anything. We need to see our break of structure manipulation M. And if we don't see it, or if it's outside of our trading window, or if we don't see the displacement from the leg out, all of those type of things, if it's not in the right location, not in a premium, which we are right now near a premium of this range, yeah, though it's a smaller range, that yellow range, we're up in a premium. If all of those things are not aligning, I'm not taking the trade. Don't care about Tom, don't care about Dick or Harry or whatever them man are doing. I'm not taking the trade. Why? Because it's my money. Why? Because when I go and I pull out $1 million, that will also be my money. Yeah? So it's very, very easy for us to be able to take trades that are not what we're looking for. It's a lot more difficult for us to take trades that we've seen all the factors that we want to see. Yeah? So look how we came all the way here, right near where that other liquidity level is, and we're seeing a little reaction here. I'm happy about that. Why am I happy about that? Because that's looking like it could potentially, I'm going to draw it beside it, it's looking like it could potentially be the middle of my M. So all I want to see right now is a nice nam of that liquidity there, which I'm going to put, it should have an alert on it, but let me make sure it has. A nice E of that liquidity there, above that red line. And then that would be my right shoulder. And then I see a nice big displacement candle. That would be my displacement. And then I'll be like, yep, ready to get in. Yep, ready to get in. Let's go. That's what I'm waiting for. I don't know if that's going to do it, but this is what this little push here is giving me this energy. Yeah? It's giving me that energy. That I want to see that happen. And then that happen. Yeah? And then we're ready to potentially rock and roll. And even then, the market can give to, could go and stop me out. Hence the reason why I have to manage my risk. I can't be like, okay, yeah, I've seen everything now. I'm going to go in, and risk 10%. No, even then, I've got to manage my risk because I could be wrong. Yeah, there could be something going in. Let's have a look over here. Yeah, big up for the Dominicans, you get me? And the St. Lucians, come on. Yeah. Over the weekend, come on. Gold medals. Yeah. There could be some stuff going on over here, yeah. We've got Euro news in 3 minutes. We've got USD PMI later on happening, yeah. Just around New York Open. So we might not see anything happen at 2:30. Might wait till 2:45 to see this PMI information. Yeah, 3 o'clock PMI information. There's these other reasons that can give us an L, add some volatility to the markets where we wasn't expecting it, and we could still lose. Hence the reason why we manage our risk. So even when we see all of these type of things, we can't go full tilt and just go crazy. We still have to be patient. We still have to understand what's going on. Yeah, just like we are right now looking at this GU. In my opinion, it's setting up. It's setting up right now. If I see this push up and make a nice manipulation M and then push down, I'll be saying it's be setting up nicely. I'll be moving my setup energy to, from 5 to 7. And then when I see it coming back for the area, I'll be like, yeah, it's definitely looking tasty. I'll be moving my 7 to 9. And then I'll be executing and saying, let's go. All right. Let's have another little look back here at our other little pairs that we had here. We've got our US 30 pair over here, which is again just doing. Did it go down and grab that other liquidity here whilst I've been speaking? Let's go and look at US 30 properly. G still mucking about a bit. Let me go and look at US 30 real quick to see if it went and took the area that I was interested in. I didn't hear an alert, but then again I might not have set the alert. Let me see. No, not yet. that bright red is what I'm interested in. I think the market's going to maybe push down into here. All right. I don't know. Like I said to you, I'm watching it. I do not know what is going to happen. Because US 30 and GU typically sometimes do similar things, but they always do have this, sometimes they do have this divergence. They do something different. All right. But I want to really evaluate them independently. I don't want to blur into both of them. Let's look at EJ, which we said in 3 minutes there was going to be some Euro news. Let's see whether or not that is presenting to us any type of opportunity. Well, EJ we've seen here have a reaction down from where? From after grabbing this liquidity. It's pushed all the way up in here, back up to Asian session lows. Okay. This is the previous Asian session lows, and therefore a previous battlefield. All right. And therefore, let's have a look to see whether or not right now we're getting any type of indication, correction, continuation, because that market wants to keep coming down, or whether or not that market is going to, so it hasn't really taken, well, it has taken liquidity-ish from some of these levels, you know, but nothing to write home about. In my opinion, there's more liquidity over here above this little level in here, if it, you know, if that's what it wanted to do, but it's not prime. It's not prime level. Okay, it's just where this market, this energy started to break outside of Asian session low. All right, and the only reason I'm looking at this right now is because in the next few minutes, based upon economic calendar, 8:55, we're going to get some news here coming out of Euro, and in 4 minutes we've got some more Euro news. So I just thought maybe let's have a look at it, see what it may be doing. We're at a previous battlefield, but on the bigger picture, have a look where we are. We've came and traded all the way down into this discount of this yellow range, taking liquidity, pushed up in here. Is this market finished? Does it want to push up further to the top of this range? Does it want to do the hokey cokey and go sideways for a little while? I do not know. All right, I do not know, but what I would say is that the Japanese yen has gained substantial strength in GJ, EJ, and we can go and check the actual index. Let's go and check the index to see the strength. What do I mean by checking the index? I mean, we can go over here and we can look at something called the JXY, Japanese Yen Currency Index, and look at that, showing how much strength the Japanese yen has gained, pushing up here like crazy. Yeah. So that strength is the reason why GJ, EJ have been coming down. Because think about it as a scale, GBP on one side, Japanese yen on the other side. If Japanese yen got stronger, i.e. like heavier, then that market scale would be coming down, right? Because Japanese yen would be heavier than GJ, than Great British Pound. And that's why look at all of this strength is the reason why our GJ and our EJ have been going bearish. All right, and when we're looking at this Japanese yen index, we can see that over here is liquidity. We can see that over here is liquidity. We can see there's this whole imbalance over here. There is an imbalance that's been marked out by me already. Look, that market might decide to go and push up, continue to push up some more to close that imbalance. Therefore, meaning that it's possible that our GJ and our EJ continues to come down, 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 down. All right. So though we're having a reaction right now, it could continue to come down. There's reasons why the Japanese index wants to push up some more. So it could come down in here and we can see clear reasons below liquidity, 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 that this market might decide that it wants to keep coming down. Yeah, even though we've had this little push up right now, have a look at it on a 1 minute time frame. Ultimately, we're seeing good reasons, more reasons for it to keep coming down than there are for it to keep pushing up. Right? So we came up in here, we came into a previous battlefield over here. Yeah, and you know, on a smaller time frame, it's not clear for the structure. There is a little bit of structure in here. If we can see, if we draw some lines like this, that potentially this here was a little low. All right, that little white line, and we're seeing the market break outside of that little energy here. Boom, boom, boom. Look, if this market comes and closes here, you know, how much is that? 60 pips on the EJ, on the basis that maybe that market's going to turn around. But to be perfectly honest, see how we're here dancing around in that previous battlefield? It'd be nice to see it maybe grab a little bit of liquidity first, draw a nice breaker structure M before we decide to go and get in. Structurally here on a 1 minute time frame, like I said, it's not the cleanest. Here is some structure that I can see in my eye, regardless of the color of the candles. And here's some more, and here's, oops. And here's some more, and here's some more, all right? But at the moment, we haven't got closure below these levels on a 1 minute time frame. We just got some wicks, some wicks, some wicks. So, you know, if we're trading indication, correction, continuation, we have to wait for closures. Maybe we'll get one now in the next minute. And therefore, you know, there's a potential punt in this direction, because ultimately I do think there's a lot of reasons why that market is still coming down. We've got some news coming out in the next 15 seconds. Yeah, there's news coming out in the next 15 seconds. HCOB services, look, 40 seconds, it's ringing off. All of these things are going to have news all coming out in the next 30 seconds. Let's have a look and see what's going on over there. Let's see what's happening there. I'm trying to pull it up quickly on my broker. Euro JPY. Let's see if are we going to get any reaction right now? Is anything going to happen? Does the market care about that news? Has it already been priced in? I think we're gonna fall to. Let me see. Just got a little indication. Very, very tight one. I'm just looking at it, guys. So I'm talking out loud. Apologies. All right. All right. And this is how you guys are supposed to be looking at these markets constantly, being able to look at them, you know, make a decision, come to some sort of conclusion of what you think they're going to go and do. Not based upon your gut feeling, not based upon FOMO, based upon looking at certain things. Like I said, here right now, it's not very clean at all. We haven't got clean price action on a 1 minute time frame. Maybe on the 30 seconds here, we're looking at something. Yeah, see, look, maybe here we're now getting a little push down below this level of structure on a 30-second time frame. But even I'm on a 30-second time frame, it's still difficult to see structure. Do you get what I'm saying? Like, we don't need to be reaching. We want to make sure that we're pulling out salmon. Yeah, we don't need to be saying we're just dragging. See, we got a little closure here. Yeah, below this level now. We had some wicks before. This is indication, correction, continuation now. All right, and we're watching it. You know, is this market going to correct and then close back down here without breaking this previous little high in here or in here? 9 seconds, possibly. You know, possibly we might be try and take a very a little jab in here. We'll see. I might take a little jab to see how it does, but it's going to be very, very tight. I'm not going to get involved. I'm literally just testing the markets as I did before, as I did with the GU, sorry, which is still in some profits. But I want to go and see the structure of it now, whether it's giving me what I'm looking for. If it has given me what I'm looking for, then great. But I'm looking away at the moment. I'm just looking over here. All right, I'm going to test this one here. I've given it a little test. Very, very small. When I'm testing, I'm always very, very small. All right, that's why I don't care about it too much. I'm going to come back and look at it in a minute. Let me do this. I'm going to change this from showing me 3 different charts. I want to see one chart. GU. Let's see what's happening over here. Whoa, look. GU did give us a manipulation M, but on a bigger time frame. A bigger picture. Kind of. Let me see. Kind of. Let's go and move to our 5 minutes. Have a look. Yeah, you see it in a 5 minute, and we've just tapped in. So, you know, maybe there's a little opportunity right here. Have a look. Here's our entry right now this minute. Stop above those highs for 20 pips. It's quite a big range. So you could take that trade now. We stop above there for 20 pips. Seeing how the candles have reacted out of it. I may take a small jab once again. I may do. Okay. It's Monday. It's a little bit jabby. It's a bit feely at the moment. All right. It's Monday energy is a little bit feely at the moment. And I'm just trying to see how the candles have reacted. All right, see how the candles look. This is on the 5-minute time frame here. This here is previous belt, is the middle of the M. Where we've come and tapped in is the middle of the M, and therefore our stop has to be all the way above here, and that is about 20 pips. Yeah, on a smaller time frame, if we look at it, then there's other imbalances in here that could do some stuff, and the market could get deeper, but that's fine if our stop is above here. So we can either just sit and watch it and understand that the market could take a deep retracement in here. But you see, for me, at the same time, like I said, I'm still quite concerned about the fact that it hasn't come up here and taken this liquidity. I'm concerned about that. I'm not going to lie to you. On a smaller time frame, I'm concerned about that. On a 5-minute time frame, it does look like we've got a manipulation M above these levels, and the market is now coming and tapping into here where the imbalance was. But I really want to see these candles react from here, and there is some smaller imbalances all the way in here. If I show you with that tool, that fair value gap tool, all right, whoops, you can see there's these imbalances here. It's this closed one, it's coming all the way up over here. So we might see this market push all the way up into here and then decide to turn around, but I don't know. I'm going to watch it and see how the candles react. Okay, we could, if you just hit that button for the 20 pips, cool. You hit the button for the 20 pips, you're still in. You're negative now, but you're still in. But this market, I want to see, say for example, right now we're coming to this imbalance. I want to see how this candle reacts right now. Yeah. Alternatively, I'm concerned about this liquidity above here. This is the only reason why I didn't get straight involved. I'm concerned about that liquidity right in here. All right, so we can see that imbalance. Let me get rid of some of these indicators. It's making my charts look mad. All right, and we'll move this out of the way. I'm concerned about this liquidity here. So right now we're in that little final bit of imbalance on a smaller time frame. Not that I'm involved. I don't like how this candle's pushed all the way up into here. So like I said to you, my money's in my pocket, man. I want to see that liquidity. I want to see it take the liquidity straight away and then start doing something. So we'll see. We'll see how we do. I'm good on all fronts because, like I said to you, I do have a position in it that we took from low down. Okay, we closed here. We didn't break above this little bit of liquidity. I just don't like how deep it's come, to be fair. But it's Monday, and Mondays always display. I've seen some deep retracements earlier this morning, so it might decide it wants to do that some stuff as well. Watching it, I do have an alert on this line here, I believe. Yep, I do. So that's the alert. That line should ring if we break through it. Our EJ, have a look. It's been coming down. All right. I did say if we got an indication correction continuation, smaller time frame, that I will look at it, but it's a bit reachy. Okay. But we have broken. Price has broken outside of that range, that orange range over here, and we did look at the JXY and see how there's imbalance above and a draw on liquidity above, and it might be a good reason for the market to continue coming down. We also saw that the market didn't take some liquidity from below these levels. All right, so here could be a nice trade pushing all the way down in here. Well, I'm already in from up here, but you know, we can see now we're still indicating correcting and continuing very nicely. All right, the EJ is doing good. Great, and the GU is doing okay though from this buy here. Now we're coming to this level here. We're going to hear my alert ringing. Now, because we've got all the way up into those levels, I'm now going to securing some money from that smaller position. Okay. Because I'm thinking to myself now, after taking this liquidity, which it hasn't quite done yet, and this hasn't quite rung. This hasn't quite rung yet. Let's have a look. Yep, crossing up. I've got an alert. Let me quickly see if I'm missing anything. Yeah, so even this line's a bit poor above here. And above there, we can see some imbalance in here. And then we can see on a bigger picture, this breaker structure manipulation M, that this market may decide. So here, I'm very interested. Maybe that push, that GBP push might go all the way up into this level here. Have a look. And if that is the case, I'm happy. because I've got a little position that's running and nice profits. All right. Stop is miles away. Right, my stop is absolutely miles away, to be fair. It's fine, but it's just not a big position. Like I said to you, it's not in 4 figures. It's still 3 figures. Yeah. But we might see this market push all the way back up into here and have a reaction. Why? There's a big unmitigated break manipulation M on a 15-minute time frame all the way up here. Okay. And there is some liquidity above here, which I had an alert for. But when I look closely, it's not only that liquidity that's sitting here, there's also some imbalance. And then when you get to that imbalance, there's also this more imbalance. And then this minute. So we might see this market deciding it wants to push up in here. Either way, I'm a day trader, so I must read and react. I do definitely think we're going to take this liquidity here any minute now. Yeah, which is good. It's going to give me more profits. I'm happy about that. And our EJ, because of how we've looked at the JXY, the Japanese index, and we've seen reasons why that market wants to potentially get even stronger, imbalances, liquidity levels, yeah, and the fact that this EJ, when it came all the way down here, didn't take the liquidity that we thought was, was down here. Look, there's lots of liquidity below here. It took this little level in here, cool, liquidity taken, but we see more liquidity here, more liquidity here, more liquidity down here, okay? That maybe this market is going to run like this whilst the Japanese yen goes and closes up imbalances above. I'm talking about the actual Japanese index, not index, sorry, the Japanese currency, JXY. All right, so maybe we'll see that. Yeah, maybe. Either way, we still are going to trade what we see. Any minute now, I'm sure we should hear my alert ringing for GU pushing up further. And like I said, the GU scenario is that this market could decide it wants to push past here, grabbing this liquidity, and just keep pushing. Keep pushing, maybe until London, New York, yeah? And then in here is where we can see a actual 15-minute, this is on a larger time frame, 15-minute big unmitigated manipulation M over here with imbalance, yeah? Right where we want to see it, look, yeah? Right where we want to see it, imbalance in here. In here, see, there you go. There's that GU, just like I said, like clockwork, pushing past this imbalance, this liquidity level. All right. And like I said, I'm happy about that because I do have a position in there running. But overall, I'm interested in the market doing this. All right. And overall, I'm interested in the market doing this. We're pushing through this imbalance level. Then we're seeing above more imbalance and this manipulation M in here, where we might see the market tap in there, start going a little bit sideways, consolidating, making a little decision. I don't know. Or it might just react to it straight away and start running, going to hell. Either way, I'm very, very interested in this area here. Let me look at that area here on a 5-minute time frame as well. See what it looks like on a smaller time frame. On a smaller time frame again, we still have this manipulation M setting happening over here. And I'm very interested, therefore, in, with more accuracy, I'm very interested in this area in here, okay? And we can see a big bearish engulfing candlestick pattern over there. If I drop all the way down to my 1-minute time frame, which I don't need to be in my 1-minute time frame, but I'm just trying to look at it even from a more accurate perspective. If that market gets up there, because I still don't know, I'm not marrying that idea. But on a 1-minute time frame, we can see this huge imbalance, inefficiency that's left in there. Not necessarily a very clean breaker structure M. We could see a previous breaker structure M in here. It's not the cleanest. Yeah, it's not the cleanest. This left foot isn't great. This left foot, but it's close. How the market originally tapped in here. Yeah, originally tapped in here. Boom, fell off from that point. So we're wondering whether we're going to get back up into these levels here. Market is pushing up. Okay, is pushing up. I have an entry in this here trade down here somewhere as a jab, as the market indicated, corrected and continued. Yeah, and then corrected and continued again. So I think I've got an entry or two here. Yeah. because where we was looking at it is when I was looking at it when it first took liquidity, even though Jivan said he saw an entry, I couldn't see a very clean. I couldn't see a very clean manipulation W here. I couldn't see it. All right. Now someone else is going to say that they did see it and therefore that was their entry over here. Good for them. I couldn't see it. Okay. I couldn't see it in here. It's like I couldn't see that leg out with real displacement, you know. But maybe someone else could see it and that was their entry and they're rolling. But my entry was after I saw a clean indication above these structures here. Okay, so this is some structure. This is a clean indication. This could be a correction. This could be a continuation. You're stopped below these lows, yeah. Or better still, if you didn't get in there, this is an indication, definitely breaking both this structure and this structure. This is a correction that didn't break the previous structure. This is a continuation. You could have had an entry here with your stop here. So I had two entries. I had one entry here with my stop all the way down here, very small position. This is all part of the indication leg. Then when I saw this correction and then just about is going to continue over here to go and hit to take another entry, I actually saw it didn't close cleanly above this level, but made a lovely retracement again and correction. I took a more aggressive entry like this, and that's why I've got one little jab of two jabs of an entries, you know, running in this direction. Okay, now this jab here of an entry, when it started to push up in here, I made it risk-free quite early and I got stopped out of it. So I've only got one entry. I wish I didn't now. So I would have had two entries and this was a bigger entry. So I've only got my smaller entry that's running in here. And my smaller entry is, you know, like $500. Yeah. Oh, but have a look here. We took this liquidity here with a is that manipulation here? Kind of, yes. And we tapped in. That might be an entry, you know. That might be the end of that road and that market might just be deciding to keep it shuffling here. It's not the greatest of manipulation, but we have tapped in. So we might tap in. We might see that market push down a little piece. Even though I was looking at, yes, this market getting up into these levels, it might decide it wants to push down here first. And if we're saying that this is a manipulation, it's just a little bit tight. Monday is a little bit tight, but I'm going to take it as a jab. I am going to jab it out personally. I am going to jab it out because I want to be in for the sun. I don't want to miss it. I'm not going to lie to you. I do not want to miss it. So I'm going to take it as a jab. And if I lose, I can offset it with the profitable position that I've got running that is ultimately in the opposite direction. Okay. So this comes into another element of trading that you will learn, which is about hedging. All right. I'm ultimately saying like, yeah, I want to be in for the sell. You know, I don't really want to be in for the buy, but what I'm able to do is I'm able to hedge a position, okay, that is offsetting if I'm wrong. All right. If I'm wrong, I've got a position that's going to offset that. Yeah. Because this is not the cleanest, but it's taken liquidity and I can see my manipulation M in here. And then it kind of wicked back in and tapped in. But the displacement leg wasn't big. In fact, I don't believe that this is the leg. I want to see a big displacement leg. I'm not going to lie to you. So even if we start running down here, closing a little bit of imbalance, I still want to see a nice big displacement leg, like what I can see on the 15-minute time frame. So on the 15-minute time frame up here, this leg out is a nice big displacement leg. Look at it. Bang. Breaking that middle part of the structure. Yeah, nice big displacement leg. And then it even gives me a nice follow through red candle as well. This is what I want to see. Well, I'm not necessarily seeing that on a smaller time frame over here. So even though like I've just taken a little jab, which is in profits at the moment, I don't think to myself that that's really the move. It's just like a reaction to the liquidity. Yeah, I don't know. Yeah, I'm not the oracle. I do not know, but that's what I believe. I believe that we might see this come down here, might just close this imbalance right now. It might even get down to these equal lows. But I really think I want to see a really strong leg out. So for me, something like this is another trade that if I don't want to take any L's, I will protect myself as quickly as possible. Yeah, I'll protect because I'm jabbing. I don't want to miss the move. There's some concerns I have, but what has this trade got going for it is that we've just taken this liquidity that you see me identify here, and we made my breaker structure manipulation M. That's what the trade's got going for it. Okay, that's what it has going for it. Yeah. So for that reason is why I'm like, you know what, cool. I don't mind having an exploratory trade in it. The concern is like I said, on a bigger picture, which is a bigger picture, 15-minute, all the way up here. Yeah, that there is this real key area of interest. Maybe later on in the week, we might see some massive spike that happens and it spikes right up to that area. I don't know. But I do know we've taken Asian session high, previous London session high, made my manipulation M, made a little leg out, a little imbalance. The market came and tapped back into it. I've seen what I need to see. I'm in the trade. All right. Is it the best? Is it as good as that one above? No. You know, am I concerned about it to the point where I want to protect myself? Yes. Yeah. At the moment, I've moved my stop where I'm only risking 0.5%. So I don't really care. Okay. I don't really care. But if this market starts to really push down with some, you know, some vim, then maybe I have caught it. And then we're going to start breaking some more significant structure. All right, but it's Monday, and these are the complexities of a Monday. Any questions? Anything anybody wants to say today about anything? We're about to round up. We've got GBP news in 10 minutes. Should we stay on for the GBP news? Let's stay on for the GBP news in 10 minutes, which is PMI. There is, PMI services, global S&P global services. Let's see if that has a reaction in the next 10 minutes. So the session will finish at 9:35 after we see a little reaction. And yeah.
What markets is that likely to affect? The indices?
I don't know. PMI news. Maybe we can ask Al, or we can have a look into previous history. I'll tell you what. Let's do it as though Al's not here. And you know, how would we do some research into that? Well, we can go and click into PMI. We haven't got enough time. We've got 9 minutes. But we could go and click into PMI. All right, global services. In here, we can understand what it is. A higher than expected figure should be seen as positive bullish for GBP, while a lower than expected figure should be seen as negative bearish for GBP. All right. So that means for GBP losing strength if it's a negative number, and if it's a positive number, bullish. So therefore, if our GBP, this number here, which is 52.4, comes out less than there, we might see it losing strength. We already think that the Japanese yen is going to be gaining strength. That's very bearish for GJ. All right, it's bearish for GJ. Okay, which we were saying is bearish, and which I'm in for the sell with GJ and EJ. All right, but we can go into history on another day. And we could go back here and pick up some information where we can see this happen and see what markets had that reaction. So we can go and look at the US 30 and see that. In my opinion, you know, direct markets, maybe your GJs, maybe your GUs, depending on what USD is doing, all right, will have a reaction. I'd say GJ. You know, you already took some money at GJ. I'd say maybe that'd be a good look to look at GJ next 10 minutes. So let's go and have a look at GJ or EJ. Yeah, same. Yeah, very similar. So I'll tell you what we do. We'll split our screen. We'll put GJ on one side. We'll put EJ on the other side. And that GU is breaking structure. Fantastic. It's good. Moving into more profits. And the other position I had bullishly, I moved my stop. So I took money out of it. So I've taken the money out of it. So I've been stopped out of that for profits. And the buy. And now I'm in the sell for profits from that area of interest. So let's have a look in here. Make this one GJ. And we're going to see in the next 8 minutes, if it's not for sure, if the markets are going to have a reaction. Okay, we can see here that on a smaller time frame, the market came up here, yeah, grabbed liquidity with this wick, okay, and has started to break structure on a smaller time frame. This is GJ, same with EJ. It's the reason why I'm in EJ. Indication, correction, continuation in the right direction. All right, so we saw this market come up here. We saw this wick grab liquidity. Yeah, we saw it actually on the EJ anyway. We saw it make a manipulation pattern, and now we've seen this market pushing down here. Now we're breaking some structure. Have a look at the structure that we can see cleanly. You can see this is some structure. Yeah, we can see this is some structure. We can see some minor structure in here. Yeah, there's some minor structure in here. This market has been pushing down, breaking some of that structure. We'll see whether or not in the next, if PMI for GBP USD is going to come out. What did it say? What did it say again? It said that if it comes out negative, it's weak, bearish for GBP. So if it comes out negative, meaning that GBP USD, meaning anything less than 52.4, maybe we will see a reaction to it. But you have to understand also, maybe this has already been priced into the market. Do you understand? Maybe the analysts that I tell you that they got corduroy suits and white socks and shoes with Velcro and big, massive glasses, yeah, that are thick. Maybe they've already done their due diligence, understood that the market is going to come out less than expected, and they've already priced in these factors. Maybe that's why this market has been pushing up, because they priced in the fact of it falling back down to the level. See, what pricing in means is this. It means that, for argument's sake, the market wants to keep GJ at 180. Yeah? At 180 quid, or whatever it is, they say, yeah? So it knows that PMI is coming. So what you see the market doing is having a push in the opposite direction. On basis, it wants to dump back to 180. So what has it really done? Nothing. It honored its agreement to stay around the 180 mark, but it moved the market and took liquidity of people left, right, and center, but then got back down to this area. Now that's a very crude description of pricing in, but you get my point. My point is that sometimes when there's things happening on a smaller time frame, you see the market move in the opposite direction, because what it is doing is it's simply pricing in the fact that, you know, when this news comes out, this is going to happen or that's going to happen, because they've done the analysis. They've done the analysis for themselves. They're like, yeah, we believe this is what's going to go on. So yeah, that's what we're doing. We're pricing it in. Okay. And that's what we see happen a lot in the markets, especially with scheduled news. Yeah, news that is scheduled. Because if it's scheduled, I know it's coming. It's not like to say that, you know, someone just tried to shoot the president. You understand what I'm saying? If someone just tried to shoot the president on a random one, unless I've got that, I've got that secret handshake going on and I'm in them societies, then I didn't know that was going to happen. Yeah, but scheduled news, I know that scheduled news is going to happen. Do you get me? So therefore, I can price in for that. All right. So the next 4 minutes, we're going to get that news over here. 3 minutes, and then we'll see if it has a reaction. It may have no reaction. All right. It may just continue its momentum, it coming down into these levels. All right. But we're going to watch that, and then we're going to call this session quits. And I'm going to let you guys get on with your Monday. I know it's bank holiday, so some of you got the youths and you're having to work out what to do with them. I get it. Yeah. But we're going to afterwards watch a video from Guy all about the economy could get worse. The BIS predicts this. We're going to find out who the BIS, which is the bank International Settlements or something like that. I can't remember, some kind of.
I saw something today saying Warren Buffett's selling all of these stocks and that. Have you seen that?
No, I haven't seen that, but we're definitely going to go and check that out and see what go on. See, you know, what we think about that. We'll check it out. I'll try and find something for us to watch and see. But literally, we've got 3 minutes. We're going to watch this news, see what happens. Either way, today we're going to be trading, managing our risks. We're going to be trading within our strategy. We're not going to be FOMOing into trades. We're going to understand that Monday can be quite a complex day in the markets in regards to markets doing things that we didn't expect, because it's catching up for what happened over the weekend. You get me? True Dominica won gold medal. Who knows? The markets might start rolling. I'm Dominican, if you don't know. Yeah. Yes, you get me. So you know, these factors, these things that happen, have a bearing. Okay, they have a bearing on the markets, and for that reason, you know, we may see markets move a bit funny on a Monday because it's catching up. Okay, we've got 2 minutes now for that news. Over here, this one's saying 1 minute. My clock's saying 9:28, but you know, who knows? Yeah. So we're watching it, and we've got EJ open here on one side, and we've got GJ on the other side, which they're cousins. Yeah, they're absolute cousins. They do the same stuff. And for complete transparency, I am in EJ. Okay. I don't have to be in both of them. I don't. I would probably prefer to be in GJ, to be fair. But you can see the entry was over here for there, and the entry was over here for EJ. And hopefully that market's going to continue rolling because we looked at the JXY over here. JXY. We looked at the JXY Japanese index, and we saw some good reasons over here in liquidity and imbalance that this market might want to continue being bullish. We've seen all of that bullish energy. Okay. And if that continues being bullish, giving strength, and if in the next 1 minute the GBP news comes out weakening, less than what they've predicted number, and they've predicted 52.4, then maybe it's giving fundamental information. Here we go. Let's see. Look, 32 seconds, 31. See what it comes out as. I think we're going to go, we prefer to be here. In fact, let me see if I can pull it up on the screen as well. So we've got everything on one screen. And let's see if we're going to have any type of reaction. 9 seconds, 8 seconds. Let's see what that number comes out as. And like I said, it's very possible that nothing doesn't happen because it's all priced out, or it's very anticlimactic. So now the numbers coming out, it's calculating it, it's doing something. I don't know. The traders are looking at it, the retail traders are looking at it, and maybe something happens, maybe it doesn't. Either way, we've at least got an angle on it and understand how these markets. So this came out actually slightly better. Okay, slightly better, slightly positive for it, which might mean that we don't see no volatile move. It just balances it out. Yeah, because that Japanese yen is still quite strong. So it wasn't necessarily the catalyst is waiting for. But what I would say is this, have a look. I would say is that though we just got that news just come out here for GBP, we have got PMI news for US dollar, and that can be the one that really counts. But guys, on that lack of anything happening, anticlimactic energy, we've seen a little bit of some green candles up here. I'm going to wish you guys an absolutely fantastic. I'm going to say goodbye to the people that are on YouTube watching. Do like and subscribe and watch these sessions back, because it gives a great insight into how you can trade, how you can make decisions, how you can hedge. It exposes parts of our strategy, etc. All right, so do like